G'day, Divergence traders. It's Friday. Not the best of days, is it? the big dogs, or the whales, or whatever you want to call them, they're doing their usual chop up and down bullshit. That's what they're doing. But let me show you the divergence I found anyway. Despite their choppy, croppy crap. Right here, we got a low and a lower low, right? That's what we need. And we have a low and a higher low on the OSMA. So our entry would be right on the opening of this candle right here, ladies and gentlemen. So you would have got in long right there. Your stop would have been about 20 points. It would have went against you maximum 33 points. I'm pretty sure that's 33. Yeah, it's got to be 33. Am I looking at the right thing? 262 points? It can't be that much, can it? Let's see, 13,847. 13,874. No, it's just 20. It's 26 points. Damn brokers with their gazillion numbers. There's like 7 numbers they got on here, when there should be only like 5. We got 7 on here to confuse things. Okay, 26 points with our 20 pip point stop. We got our 1-to-1 win-loss ratio from a buy entry here to the top. Okay, then we were looking for a short. Now this is at 25. This big candle happened before the open, and they sunk it down how much? 27 points. So there was no entry within these 3 wicks here. There was no entry to sell it, okay? Our trade came after, see, everybody who was selling in here, they put their stops here, some put them up here, and what do you think they did? Them dirty bastards! Bastard! They took it back up. Why did they take it back up so quickly? So they could get all the gold. They went gold digging, ladies and gentlemen. Gold digging! That's what makes divergence so frickin' powerful, is that we get in after they go after the stops, usually, unless they go after them again and again and again. If they do that, well, you know they're really digging for gold. That means they didn't find enough gold the other 2 times they were digging. The damn gold diggers. I don't like gold diggers. I really don't. I like the gold, but I don't want to dig for it. Okay, so we had a high. This resulted in a high and a higher wick high. Okay, and hold on. My brain went for a fart. So right here to right here, wherever it lines up, it's actually this tiny little doodah is where we draw it to. Right there. That's it. So my question to ask you would be, would you want to get in short right here, okay, after it came back down 40 points? That's what your entry point is. Me, I would wait for some kind of retracement. So back up into my 5 and 7, I would have looked to get short in here, because I wouldn't want to have a huge stop. So I would want to, if I'm wrong on this trade and it just goes back up, I want to be wrong at a higher price, not wrong at a lower price. You see what I'm saying? Yes. That's the magic of retracements. You want to get in at a better price. Everybody does. Everybody. So then you can make more profit when it goes in your direction. So anyway, let me get the little doodah. Okay, so if you had patience and you waited, you got in here or somewhere in here. And down it goes. We'll just take it right in the middle of those two places. And it went down 33 points, okay? And your stop was 33 points because we got in at a better price. So you got your 1-to-1 win-loss ratio. Okay, then it took off back up. And do we have divergence here? Yeah, we do actually. Okay, so we'll take it right from there, right back up to the wick, to the top of the wick, and down here it was from here right to there, to the little doodah. See the little doodah in there? Yeah. Where was our entry on this one? Well, you wanted the 5 to cross down, or I wanted it to, and you would have got in short somewhere in here, and down it went again to the low. So where would you look to take profit? A few points before the low. That's what you would do. That's what other people do, and that's it. So there was three trades here: a buy and 2 sells. Oh, okay. Let's go on now to the Dow. Oh God! Oh my God! Look at this! Look at this! They just chop people up like it was, I don't know, mincemeat. That's the saying. Oh man. Okay. So we got a high and a higher high. So let me explain this to the doubters. Okay, I'm gonna take a little time today because I have had a few comments where they say, "Oh, you're showing us in hindsight. Oh, you're showing us after the fact. That's bullshit. You don't know what you're talking about." You know, this kind of comments I get from people, and I can understand why. When I first was shown this, I was saying the same thing. I was singing the same tune as what some of you are. Okay, until I got it explained to me. Well, I really had to like pull some teeth to get this guy to explain it to me. How do you see it in advance? How? How is it possible? Everybody always sees it down here after the trade's over. And he goes, oh. He goes high, higher, high. He goes higher highs and a lower high in the indicator. I said, that does not explain it. Right? And he goes, oh, I go, how do you know that you're going to sell in here? How? Like, what told you before that you're going to sell in there? He goes, oh, I'm not explaining it in detail, he says. He's there. When the market is going up, he says, you want it to put in a high, then a retracement. I said, okay. Then he said, if you get a higher high, that's when you're looking to sell it. So because I'm using the 5 cross down as my filter in order to get in the trade, okay, he's there. Yeah, he's there. When it's going up, you're thinking a few different things. You're thinking a high retracement and higher high, or you're thinking a high retracement and a double high. Or actually there's 3 things you need to think about, but you don't need to do this third one, okay? He's there. You also need to look at it and say, okay, we're going to put in a high, then a retracement, right? He's there. Then you look. Once it does the retracement, you're looking for that hidden divergence, that continuation of the trend. So right here, we had a pullback, we had a high. Oh, then we had a higher high with the wick. But anyway, then we had a pullback. This pullback right here, see? It's signified. Going to get long. Because there is, let me just draw it on here first so you know. Right there, okay? And right here. See, so when I'm looking for a trade, right now it's going up. I'm thinking right now, three different scenarios. Higher highs and a reversal. That's a counter trend trade, okay? A high and then a double high, then a retracement. That's a double top counter trend trade. Okay, that's number two now. And the third one is puts in a high and a retracement and then a continuation. That is what you call hard to see hidden divergence scenario. So there's three types of scenarios that you're looking for when you notice that the market is putting in higher highs and higher lows, higher high, higher low, higher high, higher low. You know it's in an uptrend. So those are the three things that you think about while it's in an uptrend, okay? Where the scenario here, there was a buy right here, it worked out, then it put in the higher highs, then right here when we had a cross down, it was a high and a higher high counter trend sell setup right in here, okay? So now do you see and understand how you find the divergence before it occurs? You see, when the market made this high right here, I already knew what to look for. I already knew from down here that there's going to be a trade somewhere along the way, or it's going to be from the top. In this particular scenario, there was a buy here and a sell right here. So there was two trades. You see what I'm saying, ladies and gents? I really hope you absorbed what I just said, because believe me, it is very powerful. If you want to make money in these markets, listen to what I'm saying. It's powerful. And that's how you find divergence in advance. It's all explained in my video course. If you want to check it out, you know, you can always reference it back again and again and again. You can also with this video if you save this video. You know what I mean? Oh, look at her tanking right now. Somebody talking about some shit or something? Oh, yeah, I don't know. Wow, she's tanking. Woo-wee. Okay. Let's get back to this. Let me get back to the trade setup. Okay. So, in this particular situation, we had this one trade. Let me put the doodah on there. So you would have bought right there, say at the top of this little wick right here of this candle. You would have put your buy stop order there, and up it went. 33 points, and the stop was only about 20. Okay? Then the second scenario was to sell, okay, on the opening of this candle, or a little bit of a retracement into the 5 or into the 7, okay? So you would have got short right there, let's say. Our stop would have been 30 points. It would have came in your favor, 14 points, and then it did what I call the scare stop, where they bring the price back up, they don't hit your stop, but they scare the living crap out of you, and you close your trade, and then it goes in your way, all the way down 100 points. See what I'm saying? I call this, you see this scenario so often, it's not funny. It's just like this. Okay, look, puts in a high, retracement, okay? In this particular situation, puts in a higher high, see, right here is the high, the retracement, the higher high right here, see, the high, the retracement, the higher high, then it will come down like this, okay? And then it will come back up, okay? Your stop is right here. And they'll scare the living daylights out of you, just like they did right here. And then they freaking sell it off. They do this over and over and over again. I'm telling you, it gets me going because It scared the shit out of me, and I got out of trades, and then it goes my way like 100 freaking points. I'm going, what the hell's going on? You know what I mean? Because I've seen it over and over and over again happen so many times. I know they're tricks of the trade now. Anyway, so you would have got short here. Stop would have been 30 points. Would have went against you 18 to 20 points. And there's your 30 points. There's your 60 points. There's your 90 points, okay? That's 3-to-1 win-loss ratio. Was there any divergence in here to buy it up? No. And aren't you glad you didn't? Because look what they're doing now. Yeah, the bastards. Okay, let's move on. I wanted to take some extra time today to explain all this to you so that you know what I'm talking about here. And you can't say, oh, he's showing us shit that's in hindsight. That guy don't know what he's doing. He's too old for this. He's been doing this 22 years. He should retire. No, I'm not retiring. I love trading. It's my passion. And I love to teach people what I know. And what I know is not bullshit. It's 100% magnifico. Okay? Okay, let's move on. Let's look at the S&P now. Oh, God. Look at that shit. Look at that shit, man. They're chopping people up like no tomorrow. Oh, man. And there's divergence, baby. Right here and here. Okay, look at this. Right here. Okay, that's a double bottom. Even though it's a little weird looking, it's not perfect. Nothing's perfect in this world. You are not perfect. I am not perfect. Trading is not perfect. No way. So anyway, you would have got long in there. Stop would have been 50 pips. Did we get? Oh yeah, we got it. 56 pips. Or points. No, 5.6 points. 5.6 points. This is the S&P. Yeah, so we got our 1-to-1 win-loss ratio. And then what did it do? Then it chopped, then it chopped, then it chopped its way down. And there's their divergence up here. Oh, yeah. High and higher highs. See, we put in the high. I knew from down here, okay, it looks like we're going to go up because of this big bullish candle. So we've got to start thinking now, high and higher high, or double top, or a retracement. You know what I mean? And in this particular situation, before this trade setup, there was a trade setup right here. Let me show it to you. Hidden divergence right there, just like that. I don't know what it is. I have to always perfectly draw it to the bottom or the tops of the candles. I don't know why I'm so perfect with that. Because nobody's perfect. Okay. Anyway. There was a buy right here. Okay, let me put the doodah on. Here's the buy. Okay. And our stop would have been 3.7 points. Well, look, it went up 4.5. You would have won on that one also. You would have won on this trade to buy and this trade to buy. And then we had this trade here. Let me show you. That's it. See? You would have got in short right here. You had the cross down. See, and it came back up. This is the scare stop, but it didn't go at your stop, and they knocked it down. So your stop would have been 4 points, went down 7 points, okay? And that's about the end of that, because look at this shit here. Who knows what that shit's doing? Crazy shit. Yeah, they're really messing with people on the euro yen. Okay, chop, 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 shop. I'm not looking for any more. I've found enough. We found like 3 of them. Yeah, 3 of them. 3 of them. I forgot to put the doodah on there. It's right here. It's right on the close of this candle. You would have got short. And it was a winner. All 3 of them hit the first target. That's one thing I also want to say is that what's really famous about trading divergence, if you look for a 1-to-1 win-loss ratio, and meaning if you put on a target of the exact same amount that your stop loss is, and how I showed you where you draw in the stop loss at the swing lows and the swing highs, okay? Like at least 80% of the time it hits your take profit. And when it doesn't and you have a loss, okay, you got to remember, think about this. Say we did 10 trades, 2 of them were losing, right? Say 2 of them were losing 10 pips. So that's 20 pip loss, right? But you won on 8 of the trades. But you see, that's the whole thing. It's hard to say it like that because they would all have to be the exact same stop loss amount. And some are bigger than others. But anyway, just for this example of explanation, let's say that they're all 10 pips. So you made 80 pips, but you lost 20 pips. So if you minus the 20 from the 80, what do you got? You got 60 pips. So it just went from, the other gurus will explain it where, oh, you had eight wins out of 10. That's an 80%, track record. It's not. It's 60% because you got to count for the 2 losses. 20 points. You see what I'm getting at, ladies and gentlemen? I've known this for like over 15 years. And it took some thinking to really figure it out. Actually, a good friend of mine from Nassau, Bahamas, he's a trader too. He actually told me about that. Pretty crazy. You go from an 80 to a 60. It's just crazy. Anyway, let's move on here. Boy, am I ever talking up a storm today. Unbelievable. Okay, let's move on to crude oil. Oh, crude oil is beautiful. Beautiful. Let me show you just the 2 trades right here along the way. And yeah, okay. So right here, we have a dipsy-do. And right here, okay. Yeah, it's right here. Okay. There's our divergence, ladies and gentlemen. See what it got in right there. Stop would have been only like 20, let's say 20 points. Went up 50 to there. Went up 70 to up there. There's 3-to-1 win-loss ratio, but if you're only going for 1-to-1, oh, you made 20. Okay. Okay. So, wow, it's the markets. I'm just looking at other markets going, wow, they're just tanking. They're tanking, man. Especially the euro yen. Wait till I get to the euro yen. Okay. So let's get this video done. It's got to be close to 30 minutes today. I give you a lot of good trading knowledge here today. No, I'm not going to call it content like other people do. That's marketer talk, not trader talk. You don't say, oh, I'm doing it for the content. I'm doing it for the content. Yeah, whatever. I'm not just a marketer here. I'm a trader, and you can see it by listening to my video. I've been trading for 22 years. I don't talk content. I talk trading knowledge, okay? And that's it. All right. We got short there. Stop would have been 37 points, and it went down 150. Beautiful thing. And no trades along the way like this one. Okay. Pound yen. Where's the divergence on the pound yen? It's right here. First trade. And we got double tops off the 172.50. Right here. So we go here to there to that pullback. And from here to here. And would have got in right there. Right at the top, right at the resistance. When this signal happened, okay, these candles were way up here at the top of the chart. And that's just the way she crumbles. Okay? So anyway, if you would have got in right there, your stop would have been 18 points. Oh, look, 22 points. You would have got your 1-to-1 win-loss ratio. And as you can see right here, it was dancing on the 172.50 price right here. Then we had a retracement. Oh, look at that. Oh, that's scary. Let me show you this. The divergence was right here. High and higher highs, not just a double top. Okay, right here to this lower peak. Boom. Almost missed this trade. Man, did they come up and scare the living daylights out of you. That's why I like to put my stops 5 ticks, points, pips, whatever, above the recent swing high. Because they would have came up and said, ah, you're it, tagged you, and took it down. Crazy. So anyway, that was your entry to go short. It came up and scared the leaving bejesus out of you, or it took out your stop, one of the two. And then it came down. Okay? So say you stuck with it, and you had your stop up here somewhere, 25 points. Well, it went down 24 to there. Then came back up, then came down. Would have gave you your 25 or whatever. And also, see this little blue doodah over here? Doodah, doodah. See it? There, you see it. I know you see it. All right. There's another trade, man. Right there to there. Okay. And from the blue doodah down there. Showing you every trade today. Right on the opening of this candle, okay, you would have sold it. Your stop would have been right there at the most recent swing high, 25 points up, and it went down 50. There's your 2-to-1 win-loss ratio. That is crude oil, ladies and gentlemen, all the way from Texas. How do you like that? Yeah. Let's go on to the euro yen now. Woo, look at the euro yen. Crazy. They opened and grinded it all the way down. There was no divergence down here. See, a low and a lower low? There's no divergence set up. What our setup was this. We got a pullback, and right there, another pullback. And from right here to right here. And we got to put the doodah on. See, I could make these videos as quick or as long as I want. And you would have got long right there with your stop here under the 149 level. And it went way up, man. It didn't cross. My 5 didn't cross below the 7. Didn't cross down here. So all the way up here for 68 points. Okay? Then at the top, there's no divergence here to buy it. There was here. And there is kind of here, I guess. I'll just quickly draw it in. Right there to right there. And right there to there. And we got an arrow somewhere in there. And it went up a little bit. Then we had easy to see divergence. Right there. Lots of trades, ladies and gentlemen, and down it went. 24 points. Yeah, and your stop was like 20 points. You would have got your 1-to-1 right there if you held on. Well, it went down 87 points right here. Alrighty then. Yes, that's the euro yen. Let's look at gold. Wow, look at gold shot right up there. Woo! How much did it shoot up? 180 points it shot up. Crazy damn gold traders. All right. Okay. Gold. Oh, yeah. Oh, yeah, there was a trade here. Okay, we got to show them all. There's lots of trades today because there's lots of movement. That's why we got an arrow up, right? If you were brave enough to take the trade right there. Let me draw them in. Okay, so from here to here, so that's right here. That's divergent. And from a low and a lower lows right there, and right here, see? That's divergent. Okay, let's wrap this up. Let's go look at the pound now. Pound shot up also. Okay, do we have divergence here to sell? No. And I'll tell you why. Because we need a high and a higher high. We need this one to be pointing up. And on the indicator, we need this one to be pointing down like that. See? But it's not. It's pointing up like this one. So there's no divergence to buy it or to sell it up right here. So then we came down. See? We have low, lower low, and lower low 3 times. And we got low, higher low, and higher low. Boom. And then we get the arrow. I think that's the arrow. Yeah, that's the arrow. And that's it. So you would have got long right here before this news, and your stop would have been 15 points. Went up 45 points. That's 3-to-1 win-loss ratio. Anyway, once again, my name's Jason Sweezy. I'm a divergence trader. I love divergence till I die, baby. Till I die. There's nothing better in my opinion. And anyway, I just want to say thank you for watching. Thank you for listening. Good luck and good trading. We'll see you Monday.